Hey everybody, welcome back to the channel. We are back with another episode of Daily Palantir. Today is the official Q1 2024 Palantir earnings preview. I'm going to be doing a couple things. Number one, we're going to be going through some of the earnings estimates that Bloomberg has for Palantir, basically consensus analysis for what people believe the estimates will come in. We're going to look at my numbers compared to their numbers. And then number two, we're going to go through the metrics in Q4 2023. Not every single metric, but some of the metrics that I thought were really important, and discuss what my metrics might be in comparison to those Q4 metrics and where I think we come in line. Ultimately, high-level thoughts. I think Q1 is going to be good. I am recording this literally 11 minutes before Jerome Powell makes a decision on if we should raise or cut interest rates. So I guess during the recording of this video, we'll take a look at the stock as I'm just talking, and we'll see, what happens to the stock. But in general, I don't know what the macroeconomic landscape is going to look like. I do know that the stock has fallen pretty aggressively from 27 now to like the 21s. Kathy Wood has bought 345,000 shares over the past 2 weeks. She bought another 45,000 shares last night. And her buy zone seems to be 45 and below. So I think they could crush and do very well and not be rewarded given the macro landscape. So we're going to see. I mean, it's one of those earnings where if Jerome Powell today just isn't happy and we get the potential rate cuts not happening as soon as September, October, then the entire market might be in a tough situation. Granted, I think inflation will be coming down. I think we will get rate cuts. So I think if Palantir performs, eventually they will be rewarded. But I think the numbers themselves will be good. I don't know what happens to the stock. I do think the company will perform. And as a long-term shareholder, which most of us are long-term investors in Palantir, that's all we can ask for. So let's get into it. Also, over the coming days, I'm going to be doing some other kind of earning previews. I'm going to be going through all the different deals that Palantir has done so far into 2024. I think that'll come out tomorrow. And then on Friday, we're going to be looking at the Q4 2023 earnings call. And I have a bunch of highlights of Karp and Sham talking that I thought were really important. And we're going to be comparing some of the stuff I want to hear them say on this call, or I would like to hear them say on this call. That would be interesting for shareholders to get more clarity on. All right, so let's put up these numbers. And real quick, before we get into the numbers, dailypalantir.substack.com, free email newsletter every single day. We're at like 3940 subscribers. We're very close to 4,000. So if anyone wants to subscribe, please make sure to check that out. It would mean the world to me. Okay, here we go. Here are the consensus numbers for what analysts expect for Palantir. Palantir Investor Space posted this on Twitter. Shout out to them. So we've got EPS adjusted coming in at about 8 cents. GAAP EPS at about 3 cents a share, which would continue for the company to be GAAP profitable, which is very good. Revenue of $615 million. That would be 17% year-over-year growth. The GAAP EPS would be up 223% year-over-year. Net income adjusted would be $189 million, which is not too bad. That would be up 76% year-over-year. We beat 5 out of 8 times over the past few quarters. And then operating profit, $197 million. EBITDA, $202 million. I don't really have a problem with a lot of these numbers, quite frankly. I think a majority of these numbers are going to be correct. The one number that I think can change, potentially, actually two, is GAAP profitability, EPS, and revenue. Now, look, I think 3 cents a share is reasonable. We would still be GAAP profitable. Again, Palantir is not a company that's printing so much cash that we just have, billions and billions and billions of dollars of profits. We are still in the beginning stages of being a profitable company. We only became profitable 5 quarters ago. So 3 cents is reasonable, and I think that will increase over time. But if that revenue number does not come in at 615, which I think Palantir guided for like basically 612-ish to 615, if we come in at like 620, 625, dare I say 630, that revenue growth of 17% is going to get closer to 20%. And I think what the street really wants to see is guidance for the full year of 2024 go higher than what it currently is. Right now, we're guiding for just under 20%, like 19.9% year-over-year growth. If we can come out on May 6th and say, yeah, we're guiding for 23% year-over-year growth, that extra 4% would be monumental in terms of how the street thinks about Palantir. They're getting back to being a growing company. One of the biggest knocks against Palantir is that they don't grow like a SaaS company should grow, and all of us that are long understand that the growth is coming. It just might take some time, and I think the growth is going to show up relatively soon. But raising that revenue guidance would be amazing. And then, again, on GAAP EPS, if they raise the revenue guidance and their adjusted operating income margins get a bit higher as well. Right now, they're at 34%. Let's just say that goes to 35%, and they got like, 70 new customers. We'll talk about customer count in a second, and they increase top-line revenue. Maybe that comes down and trickles down to the bottom line, and GAAP EPS, we come in at 4 cents a share or 5 cents a share versus 3 cents a share. So in general, I think these numbers are fine. I think we're probably going to stay in line with these numbers, but if we do beat on these, that can definitely be beneficial for the stock, which is basically right below $22 right now. Most of the analysts outside of Mariana with a $28 price target and Dan Ives with a $35 price target have us anywhere, as you can see, at $19.50. That's kind of like the core target price that most analysts have. Okay, so let's get into Q4 2023. So here are the slides that I want to discuss in terms of what I think can change and what I think is going to be better. So we already talked about GAAP profitability. We made $93 million last quarter, probably going to be ahead this quarter outside of $93 million, and that will allow us to continue that 3 to 4 cents a share. So nothing too crazy there. GAAP operating income, that's fine as well. Okay, so here's the big one. Commercial revenue count and U.S. commercial revenue growth. What am I expecting here? Commercial revenue growth is up 32% year over year in general, right? That's not the United States, that's overall. And then US commercial, that was 70%. So we went from 77 million to 131 million. I expect at minimum that's going to be at 40% growth year over year because they're guiding for 40% year over year growth. So unless this quarter went really bad for US commercial, which I don't think it will be, and Palantir was wrong in their guidance, then we should be at 40% year over year growth. Overall commercial revenue growth is very interesting. 32% year over year. I don't think it's that crazy to say we come in at 35 to 37%. Now, as long as we stay above 30, that's all that really matters to me. But the commercial deals from an international perspective, not just the US perspective, have been going really well. I mean, the Coles partnership in Australia itself was a phenomenal deal that we had. We had a bunch of different deals with a variety of healthcare providers in the United States. Like, it does seem that we are expanding the scope of the clients that we are working with internationally. And as a result of that, and domestically, as a result of that, I don't think it's crazy to say overall the commercial revenue growth can CAGR at a level that's a bit higher than what we are all expecting. We got the Italy partnership with Policio Geminelli. I'm definitely saying that name wrong, so I'm sorry about that, which was, I think, back in December of 2023. I'm pretty sure Palantir has been able to ink deals like that aren't super public in the international space, even if, they're not some blockbuster partnership, which they don't need to be. Why am I saying this? Because we've done boot camps internationally. We've done boot camps in Switzerland. We've done boot camps in London. We've done boot camps in India. We literally just went to Italy and did a boot camp, right? Like, there's so many different factors, and the boot camps with PwC, et cetera, so many different factors that are contributing to international revenue growth. We've also seen that customers internationally have been more excited for Palantir, just in terms of the anecdotal evidence that we've been seeing on LinkedIn, which we've covered a ton on this channel. So I think international plus US commercial, definitely small deals that haven't been reported, will factor into the commercial revenue growth. And then obviously the big deals that we have gotten, like the Coles Australia partnership, that should give us some really strong commercial revenue growth, and that would be really good overall. Then we have government revenue growth. Okay, so US government CAGR'd at 6%, overall government growth CAGR'd at 11%. This is declining year over year. It's not really, or not year over year, but if you look at the sequentially, right? If you look at every single quarter over the past 8 quarters, this thing is not going up and to the right. And Karp and the team have pretty much said why that's the case, right? Like, the core reason is US government is lumpy. It takes a while to get bills passed. And when they get deals, they get them all at once. They don't get them quarter by quarter. So if you're a Palantir investor, you have to understand that deals don't come immediately. In terms of US government revenue growth, we've gotten a bunch of deals. We got an electromagnetic deal. That was about $10 million. Not a lot of money, but still, we got a deal that came in there. We got the Titan contract, obviously a very big deal, $178 million right there. So we got a ton of deals over the past couple of months, over the past 90 days, that leads me to believe that U.S. government revenue growth will CAGR. Also, if you look at the remaining performance obligations, that number is still pretty high, as Palantir put out on their 10K, which is just more services we have to give to the U.S. government. And then obviously internationally, we inked the NHS deal. That's going to kind of fit into the CAGR, right, as they divide the number that we get every single quarter to recognize that revenue. And we got another partnership that people forget, Lithuania partnership. Now, Lithuania partnership was about $37 million. I 37 million is not moving the needle. But the point is, we got a Lithuania partnership, and Palantir has been seeming to make a broader presence internationally, not only with the boot camps, but with the ongoing saga that I've been covering on the channel around Germany. Germany wants Palantir back. It's pretty obvious. I think Karp's going to go on that earnings call, and he's going to tell Germany they better get their asses to take Palantir more seriously, because obviously we're seeing a ton of different German media publications basically say, hey, Palantir's the real deal, and we need them back, and the ideological leftist version of the government that's running the show should not have their tendencies basically stop Palantir from being able to get these deals. So I think government revenue can grow more than 11%. The reacceleration of it, I don't know if it happens this quarter. That might happen a few quarters down the line, but we got enough contracts, I think, to justify it. And the Lithuania partnership, that wasn't reported. I got a message from someone on Facebook that I clicked into a bunch of rabbit holes of links, and then I found that Palantir got a $37 million partnership with the Office of Data and Statistics in Lithuania. I do believe that defense contracts will be picking up. We know that we got a ton of money from Ukraine. I mean, look, okay, I don't know if we got a ton of money from Ukraine, but we got a bunch of deals. The Ministry of Education deal, the land mining deal that we got from Ukraine. So I would imagine we're not doing this for free anymore, which means if we're not doing this for free anymore and we got money from Ukraine or some type of contract from Ukraine that we can recognize that revenue, plus Lithuania deals that are under the radar, right, that I was able to like talk about, but it's not really widely known. Same thing with commercial international partnerships. The Coles partnership is big. But there's probably other deals internationally because we've done boot camps internationally that we don't know about that should be catering into the overall government revenue growth internationally and the overall commercial growth while we package in that international commercial growth. So I think government's going to grow. I think commercial is going to grow. And I don't think the numbers are going to be as bad as they are right now, given, commercial is good, government's not the best. And if that does grow, I think the market will also be very excited to see that Palantir is hopefully reaccelerating or on the path to reaccelerate international growth and then overall government growth as well. All right, guys, the Fed just decided they're going to pause rates. And so this is what we got on Palantir. S&P basically flat. Fed did pause rates. Palantir 22.15. We're up about 0.82%. We'll see how it lasts. Jerome Powell still has to talk in about 30 minutes. I'll be live streaming that on my channel. So if you want to watch that, you can go into the live tab on YouTube and watch that. But yeah, paused rates. And I think we all need to at least act surprised because it's part of the journey. We all knew that was going to happen, but it's part of the journey. We got to be part of the journey. It's like, oh my God, he paused. He paused. Paused rates. All right, back to the video. So that's what we had on government growth and U.S. government growth. Now let's do total revenue growth, 20% year over year. Again, on this one, I just think that we're going to come in better than 20%. Again, we're guiding for about 612, 615. I think we're probably going to get in line, if not 620. So hopefully that's better. And that's not just the same 17% year over year that Bloomberg is expecting. The thing that really matters to me is if we can get close to 21% or 22% and then again raise the full year guidance as I was talking about, that's going to be the most exciting part of this quarter. Now, maybe we don't do that this quarter. Maybe we do that a couple quarters down the line. But if we could do that this quarter, that would put a lot of voices that are doubting to rest because it would show that Palantir is accelerating that top line growth again. TTM revenue for top 20 customers, it was up 11% year over year at 55 million. I don't think that's going to change too much. Top 20 customers are going to keep paying us. Maybe that goes up just a little bit, but nothing too crazy. Billings was up 56% last quarter from 387 to 605. I think that can increase more. There's no reason why that's not in that same 50 to 60% range. It's really a question of how many deals did we book that we're going to eventually expect to get the billings from and how many more customers we got, which is going to be the core metric that I want to focus on. But that should be in line with the same metrics that we got before. Gross margins, 84%. I was actually surprised. It went to up 2% from last quarter. Probably going to be similar to 82, 84%. And then here, adjusted operating income margin. So this one, I don't know if this can get higher. In my DCF, I have this in the super bull case at around 40% and in like a relatively bullish case around 35 to 36%. It was 17% in Q3 about 18 months ago. Now it's at 34%. So it doubled. It went up 5% quarter over quarter. Operating income was 209 million. That's amazing from that adjusted margin of 34%. I do think if we get that to 36%, it's a hell of a job because we are showing we can control costs, particularly stock-based compensation, and we can just be more nimble and efficient in terms of the marketing, sales, and general administrative expenses to be able to get that operating income margin to about 33 cents on every dollar. If we can get to the 36 cents every dollar, that'd be amazing. But if that stays flat, I don't think that's the worst thing in the world because that's kind of, a very healthy operating income margin to have. But if it goes up, I think that would just be bravo by Palantir. Okay, this is the big one, customer count. So this is the last metric I want to focus on. This is the main metric that ultimately determines everything about what this Q1 earnings is going to look like. Really, everything I talked about in this video, this number to me determines everything as it has for the past couple quarters because we only have 497 customers. Palantir is a $60 billion or $50 billion company with 500 customers. That's kind of insane, right? I think it just goes to show the level of sophistication the software has that gets people super excited to invest in the company and, stay with them for a long time. We had 367 in 2022 at the end of the year. Last year, end of the year, 497, up 35% year over year, and it was up 10% quarter over quarter. As you can see, we were deaccelerating about a year ago. Then we were flat, 8%. Then we finally got to 10% last quarter, and now we're at 497. Commercial customer count up 44% year over year. I'm expecting that 497, if we just take, 10% of that. So 497 times 0.1, that's 49.7 plus 497. That would be 546. So let's call it 545. 545 at minimum on customer counts should happen, which would be a 10% CAGR. If we could do, let's say, 14%, right, instead of 10%, that would give us about 567 customers, and that would be about 70 customers of an increase. I think that's possible. And the reason I think that's possible is because the rate of boot camps have been accelerating. The Bloomberg article that I did an entire video about on Palantir's AIP boot camp strategy, we've done 5 boot camps a day. So it's about 440 boot camps in terms of the actual trading days, or they're like Monday through Friday throughout the entire year. Pretty incredible, right? If we just convert, I mean, let's just do the math. We did 440 boot camps, right? 440 times 0.25 conversion, we should get 110 customers. Let's not do 0.25. Let's do 440 times 0.15. We should get 67 customers. That would put us at about a 14% CAGR. And you know, like if we do anywhere from 30 to 35%, which is maybe a little optimistic, but let's say the boot camps are that effective, and that's why Palantir chose to give Bloomberg that article. They worked with them to make that article, maybe because they know the boot camps are actually working really well and they're getting a shit ton of deals. Then what if this goes to like 150 customers? I don't think that's going to happen. I don't think that's going to happen. Let me say that now. I think that's a blowout NVIDIA quarter. That's not happening this quarter, probably down the line. But the idea that we don't add at least another 50 to 70 customers is probably not going to happen, which means if we add those customers, that customer count growth should continue to be intact, which means, I mean, what? We had 391 last time. So let's just say we added 70 customers. So 497 plus 70. So we're at 567. So let's do 567 minus 391 divided by 391. That would be a 45% growth rate year over year in terms of customer count. Commercial customer count, I actually don't know. This is definitely going to probably be in line with 44% year over year because the government business is not growing as fast as the commercial business, which means the commercial business should still accelerate the overall clientele over the government business. But in general, you know, that we should get enough commercial customers to make the overall customer count very strong. So we have 375 commercial customers, 497 total, which means we have 122 government clients. If we can grow that, that's awesome. But really what matters to me is the commercial customer count in general. 103 deals. I think this is going to be relatively the same. And remember, we only got 47 new customers last quarter, right? So we closed 103 deals, which means about 60 deals came from upsells to existing clients. Like if we didn't give it to our new customers, because that counts as one deal, we had to give it to old customers. So I think the upselling will probably continue to stay at the same pace, and the net dollar retention finally last quarter went from 107 to 108. It was bottoming out at that 107%. We were at 115 at one point. If we can get to like 109, 110, net dollar retention is how much the customers actually continue to spend with Palantir, with a client, or with a distributor of software like Palantir, then that client net customer retention should go higher. And if that customer retention goes higher, that should also potentially increase top line revenue growth because we're getting more money from these customers, increase adjusted operating margins, and then, you know, deliver in general a beat for this quarter, which I think is going to happen. The question is just going to be how big of a beat can we actually get for Palantir? All right, that's it for me. Last thing I'll say is this final slide right here. Revenue of 612 to 616 million. Again, the street's expecting 615. If we come in at 620, that would be amazing. And then the commercial revenue, again, 640 million, representing a growth of at least 40% for the full year. If they raise that, that would be good. 2.65 to 2.668 billion. If they raise that to like 2.68 to 2.73, that would get us another percentage of growth. And then free cash flow, I don't think they're going to change this, but if they do change this from 800 million to 1 billion, that would be amazing. And we're still going to be GAAP profitable this year. Eventually, this will lead us to S&P 500 inclusion. I don't know when that's going to happen. Probably going to happen either this year or early next year, but eventually it will happen. Institutional ownership needs to go up. This is a quarter to get the institutions ready to buy Palantir because the numbers are going to be strong. AI enterprise spend is going through the roof. Everyone wants to spend on AI. Palantir is one of the only handful of companies that can actually deliver AI in a sophisticated, meaningful way. And then just publicly, the way the engineers have been talking about LinkedIn, And then just publicly, the way engineers have been talking about the company on LinkedIn, the way Shyam Sankar has been tweeting. I mean, you just get this idea that they're pretty confident about the direction they're going in. They're ready to execute. They know that a lot of the world doesn't believe in them, and that's a good chip on their shoulder, but they know they have the best software and the best go-to-market strategy and the best approach, which is give value, then get paid, which will win in the long term. They know that they're doing that, and no one else can really replicate that. And as a result, whatever happens to the stock is whatever happens to the stock. But I think the company will execute, which is all that can matter over the long term as a shareholder. All right, that's it for me. Thank you, everybody, for tuning in to my Q1 preview for Palantir earnings. We're going to have a couple more videos throughout the week talking about what I expect for Q1 and reflecting on what has happened over the past 90 days. And we will keep going from there. Thank you, everybody. I'll be live with Arnie. We're actually going to be in person in DC at a Palantir event that we're both going to one of their government conferences. And so it'll be really fun. We'll be at the event and we'll be live for earnings in the same Airbnb. So it'll be super fun. Thank you, everybody. Thank you for watching. I'll see you guys in the next one. And earnings will be May 6th coming up soon. Bye, everyone.